In the meantime, let's take a closer look at Apple's stock. You could see the underperformance from the world's largest company. The Nasdaq up by 12.5% for the first year. Apple only up by about 3%, 3.1%. But the shares of Apple have done better this spring. They're up more than 14% over the last 3 months. Joining us right now is Krish Sankar, senior research analyst at Cowen. He's got an outperform rating and a $180 price target on that stock. And Krish, first of all, what's been holding Apple shares back, and why do you think that they will pick up in the second half of the year?
Yeah, thanks for having me, Becky. I think it's a combination of things. One is, what we saw early this year was kind of a rotation from growth into value/cyclicals, and I think that definitely was against, in favor of Apple. That was one shift. The second one was you've seen a little bit of, after a massive outperformance last year, some people taking money off the table. And then the third one is, I would also say, the overhang of some of the lawsuits that we have seen over the last couple of months was a little bit of an overhang. But I would say it's a combination of factors, but the rotation from growth to value cyclical was one of the key catalysts earlier in the year.
So this is contingent, you think, on the Federal Reserve's action? If the Fed is a little more active about saying it's going to crack down on things, will that hurt Apple's chances along with some of the other big tech stocks?
I think it's a difficult one to answer on that, but I would probably say in general, I think the view is that as of now, the government is a little more anti-big tech. I'm talking that more from a political standpoint, but I think in terms of pure, stock-related performance, I do think that the fundamentals are eventually going to matter. At some point, the last earnings call, Apple had really blockbuster numbers. Surprisingly, the stock did not move. But I do think that as people start looking into the next year and beyond, I think there's still a lot of runway for the stock, both in terms of the core iPhone business as well as what I would characterize as the growthy services side of the story as well.
Part of the concern about Apple has been what happens with China. But if you look at other big multinationals with a big business in China recently, like Nike or Starbucks, they've done better than anticipated with China, or at least there wasn't some sort of a big pushback, a big sell-off there, and Chinese consumers refusing to buy. Do you think that is something that kind of factors in here as well?
For sure, China is an important part for Apple, both from a manufacturing output standpoint as well as a consumption standpoint in the hardware iPhone side as well as the services segment. One of the things that we have noticed is the last few months, especially when you track the overall smartphone trends, you're seeing some slowdown in effectively demand for some of the Chinese smartphones like Oppo, Vivo, Xiaomi, which is a combination of weakness in India from COVID resurgence as well as some slowdown in China. But you're not seeing any of that in the iPhone ecosystem yet. So the demand for iPhone in China is still continuing to be robust. And even if you follow some of the Chinese data on smartphone market share for the last 3 months consecutively, Apple and the foreign brands have actually gained incremental share in China. So I would say the overall ecosystem for Apple in China is still pretty healthy.
Shepard Smith here. Thanks for watching CNBC on YouTube.